Hello everyone, welcome to the market opening bell for Friday, February 20th, your 10-minute guide to the stock market. Today is the 4th day of the Lunar New Year, and I wish all good health in the year of the horse, every wish coming true, abundant wealth flowing your way, and success arriving as smoothly as a horse at full gallop. The Hong Kong stock market held a half-day session on the final trading day of the snake year, and the index fluctuated but closed on a steady note. The Hang Seng Index opened 65 points lower, dropped as much as 184 points to a low of 26,382 points in the early going, then rebounded, climbing up to 167 points to a high of 26,734 points before finishing up under 38 points or 0.5% at 26,705 points. The H-share index rose 37 points or 0.4% to close at 9,070 points, while the Hang Seng Tech Index gained 7 points or 0.1% to finish at 5,367 points. Turnover for the half-day session came to 84.997 billion Hong Kong dollars. Technically, the Hang Seng Index found support near the 50-day moving average at 26,410 points. In the short term, it is expected to attempt to fill last Friday's downward gap, which spans 158 points between 26,932 and 26,774 points. The 10-day moving average, currently sitting at 26,890 points, is offering right near the top of that gap. After rising 28% in the dragon year, the Hang Seng Index added another 6,480 points, of roughly 32% across the entire snake year. That makes it the strongest Lunar New Year performance in 8 years, since the Rooster year back in 2017. The H-share index climbed 1,688 points for the full year, up about 22.9%. The Hang Seng Tech Index gained 643 points or around 13.6%. All three major indexes posted double-digit gains, showing that overall sentiment in the Hong Kong market clearly improved over the past year. Among blue chips, Meituan and JD.com locked in fierce inflation competition, were the weakest performance of the snake year, each tumbling 44% and 30% respectively. On the flip side, Zijin Mining more than doubled, soaring 1.9 times as gold prices soared, making it the star performer. The newly added constituents, the Hang Seng Index, this quarter also shone brightly. Contemporary approx technology closed up 2.7% at $531.5. Luoyang Molybdenum jumped 6.4% to $23.1, and Laopu Gold rose 6.6% to $787.5. In contrast, Zhongshan Group, which was removed from the blue chip list, slipped just 0.2% to $12.17. Overall, money flowed actively into the new resource and precious metals names, underscoring that these themes still carry strong appeal in today's macroeconomic setting. The two big players in large language model, Minimax and Zhipu, kept breaking new highs, surging 24.6% and 4.7% respectively. Storage-related stocks also rallied, with Montage Technology up 14.05% and Giga Device Semiconductor gaining 9.8%. The wave of storage chip price increases is gathering momentum. Latest reports say Japanese giant Kioxia will roll out revised pricing for North American customers from the first quarter of 2026, lifting average selling prices by about 50% quarter-on-quarter, pushing its adjusted gross margin for the quarter to 66%. Analysts note that Kioxia's move sends a bullish signal across the entire NAND industry, sharply improving profitability. Samsung Electronics NAND operating margin is forecast to climb to 37% in the first quarter of 2026, while SK Hynix is expected to jump to 42%. Let's now check how Wall Street performed while Hong Kong was on holiday. US markets were closed on Monday for President's Day. On Tuesday, trading was mixed. The Nasdaq briefly fell more than 1% early on, but closed 31 points or 0.1% higher at 22,578 points. The S&P 500 added 7 points or 0.1% to 6,843 points, and the Dow rose 32 points or less than 0.1% to 49,533 points. The fixed fear gauge dropped 0.9 points or 4.3% to 20.3. On Wednesday, tech stocks led the rebound. The Nasdaq 100 climbed 0.8% or 175 points to 22,753 points. The S&P 500 rose 0.6% or 38 points to 6,881 points, and the Dow gained 129 points or 0.3% to 49,662 points. The VIX eased another 0.7 points or 3.3% to 19.6. On Thursday, U.S. stocks opened lower and stayed weak as investors watched the escalating tension between the United States and Iran. President Trump said he would decide within the next 10 days whether to launch military action against Iran. The Dow finished down 267 points or 0.5% or at 49,395 points. The Nasdaq lost 70 points or 0.3% to 22,682 points. And the S&P 500 slipped 19 points or 0.3% to 6,861 points. The VIX rose 0.61 points or 3.1% to 20.23 points. Here are some company highlights. Apple is reportedly speeding up development of 3 wearable devices: smart glasses, a pendant-style device that can clip onto a shirt or be worn as a necklace, and next-generation AirPods with far more powerful AI capabilities. All 3 will connect to the iPhone ecosystem and rely on different camera systems. Smart glasses could arrive as early as 2027, while the AirPods and pendant versions might launch later this year or next. Meta announced on Tuesday a major chip supply deal with NVIDIA that includes new standalone CPUs, next-generation GPUs, and the Vera Rubin rack-scale system, with plans to deploy millions of NVIDIA processors over the coming years. Tesla's robo-taxi service in Austin, Texas, has been involved in 14 accidents so far. Thanks to strong growth in its Amazon Web Services cloud business, Amazon has overtaken Walmart to become the world's largest company by revenue. Amazon reported full-year sales of $717 billion this month, while Walmart announced $713.2 billion for the 12 months ended January 31st, ending more than a decade at the top spot. eBay said it will buy second-hand fashion platform Depop from Etsy for about $1.2 billion in cash. At the same time, eBay reported fourth quarter adjusted earnings per share of $1.41 and revenue growth of 15% to $3 billion, both beating expectations. Netflix has given Warner Bros. Discovery 1 week to let Paramount Skydance submit a more attractive offer. If Paramount Skydance raises its bid for Warner Bros. Discovery, Netflix may sweeten its own takeover proposal. Netflix is sitting on ample cash, holding about $9.03 billion in cash and equivalents at the end of last year. The Federal Reserve's minute from last month's meeting released on Wednesday showed officials divided on the rate outlook. Most said they should pause further cuts for now and only resume easing later this year if inflation behaves well. A few even raised the possibility of rate hikes and wanted the post-meeting statement to better reflect the dual implications for future policy. Officials broadly expect inflation to fall during the year, but the speed and timing remain uncertain. They noted the price impact of tariffs and expect those effects to fade gradually over time. On the data front, ADP figures show U.S. private employers added an average of 10,250 jobs per week in the 4 weeks through January 31st to 6, the third straight week of accelerating hiring. U.S. industrial production rose 0.7% in January, the biggest monthly gain since February last year, and well above the expected 0.4% rise. Capacity utilization climbed 0.5 percentage points to 76.2%. but still 3.2 points below its long-term average. Initial jobless claims for the week ended February 14th fell 23,000 to a seasonally adjusted 206,000, below economists' forecast of 225,000. Our stock pick today is WuXi AppTec, stock code 2359. WuXi AppTec continues to focus on its unique integrated end-to-end CRDMO, which stands for Contract Research, Development and Manufacturing Organization business model, by firmly capturing the certainty of customers' empowerment needs. The company continuously expands new capabilities, builds new production capacity, optimizes manufacturing processes, and improves operational efficiency. This drives sustained and steady business growth, delivers highly efficient and ultimate empowerment to clients, and remains committed to bringing more innovative and high-quality new drugs to patients worldwide. The group recently issued a positive profit alert. It expects to achieve operating revenue of 45.456 billion yuan for the year ending 31st December 2025, representing a year-on-year increase of approximately 15.84%. Revenue from continuing operations is projected to grow by approximately 21.4% year-on-year. Adjusted non-IFRS net profit attributable to shareholders is expected to reach 14.956 billion yuan, up 41.33%. Net profit attributable to shareholders after deducting non-recurring items is forecast at 13.24 billion yuan, an increase of 32.56%. The slower growth compared with the adjusted figure is mainly attributable to foreign exchange fluctuations. Net profit attributable to shareholders is expected to reach 19.15 billion yuan, representing a substantial year-on-year increase of approximately 102.65%, which includes investment gains from the partial disposal of equity in associates and the divestiture of certain businesses. Basic earnings per share are projected at approximately 6.7 yuan, up about 104.27%. The group's chemistry business continues to grow rapidly. The small molecule drug discovery research business provides steady downstream pipeline flow, enabling the small molecule process development and manufacturing businesses to maintain strong growth. The small molecule CDMO pipeline continues to expand. The TIDES business benefits from the surging global demand for GLP-1 weight loss drugs, together with the quarterly ramp-up of new capacity added in 2024, delivering robust revenue growth. The group is accelerating its global footprint and capacity expansion, continuously strengthening capabilities and scale while improving production and operational efficiency to better meet customer needs. In small molecule capacity build-out, both the Changzhou and Taixing API bases successfully passed FDA on-site inspections with zero defects in March 2025. By the end of 2025, the total reactor volume for small molecule API is expected to exceed 4,000 kiloliters, while the total volume of solid-phase synthesis reactors for peptides will rise to over 100,000 liters. Construction of the Middleton U.S. site is progressing steadily and is scheduled to commence operations by the end of 2026. The Singapore R&D and manufacturing base officially broke ground in 2024, with Phase 1 planned to start operations in 2027. The recommendation suggested buy price 123.5 Hong Kong dollars, target price $140, stop loss $116. I do not hold the above stock.